What's going on? Hopefully the music volume was alright relative to my voice. Didn't really test it. Oh, that's interesting. So we had buyers and you can tell that they were icebergs here at the 4060 to 4060 and a half. Again here, 4063, 25, and then again at 4065. So lots of negative delta here for the regular trading session. So we'll see. Probably, ATR's 2.6. That's a 14 period ATR. So starting to calm down a bit, but we would expect that to expand into the Fed minutes. So I'll probably play shortly after the Fed minutes. So I'll be off here around 10:55 my time. So I'll be on for 20 minutes or so. But it is good to look here at the footprint and at your deltas at tick, because you can then see really quickly where the icebergs were likely at. You can look left a little bit here and see. Right, when did they pick up? So this is the biggest one of the day here so far. So let's take a look. See that? On the initial drop, that's where it was. Right here at 65. So, and that's close enough to T plus 2, which is right up here at 67, that you had some large player at this time. So not stupidly significant. Thinking about the price action into that area from the drop, right? That occurred right in this area on this candle structure. All right, there's the 4070 break. Right, let's look at it here. See that? So iceberg here, and they got crushed. Right, all at one level here, just crushed. And then another one down here. Right here. I mean, they're all over the place in the book, aren't they, right? You could see. This was actual size, I remember. But this was not actual, so this was an iceberg. Hence why I got long right. Man, I got such a great entry. 40.63, and I took off right into this area. Right here. Just took it off. Because I figured we'd go back up and try to test T+2, which is, you know, 40.67, so. As soon as I saw that taper, I just hit the bid right here. So was not a bad, you know, 2.5 point little play here. And now we wait. Let's see. You know, markets overall is bullish still. We've turned this area into essentially a range. So the longer it hangs out here, and we get some sort of catalyst, or, you know, one of Fat Man G makes a big move. That's what I'm looking at here off to the left. Just taking a look at some of the individual names. Yeah, MAGA, right? Microsoft, Amazon, Google, Apple. They're all up about 1%. Amazon is cruising. So if the rest of the market decides to move, we're gonna rip. But this is healthy digestion of a strong trend. A little outside the trend line now, but just going sideways, that's fine. If markets always moved in our perfect channels, then it'd be too easy, wouldn't it? But yeah, essentially in balance here. Just this area. 1, 2, 3 times. Only 2 times on the low. Yeah, I would favor upside, especially with the iceberg buyers today. Right around value. Just below 40.65-ish. And that's POC. So we'll see. You either get long here and put your stop below the lows of this, or when it pulls back into structure, these are weekly, by the way, you look to get long around, yeah, that's you know, 40.51 are TPO singles. See that? So these are singles left over. Also 40.34. I like 40.34 and below for gap fill. I would be buying now down there if it acts right. But anyway, you can see the volume or the market profile here. Okay. Volume all hanging out in the middle, and we're building volume against the ledge here. So would not surprise me to see us move up and test this area. Value area high, essentially. But we'll see. We've got the Fed in 18 minutes now. So anyway, I hope my voice relative to the music is correct. Let's take a little look here. So 50%. We didn't quite reach 50% here at the lows. 50% just taking initial balance and splitting it. 50% is right underneath, or maybe close to this area. So for such a low ATR, yeah, very, very, very standard, very neutral initial balance, or this range. I'd like to see more pullback before up, but with the Fed minutes we may see some volatility. Let's maybe play the edges of that for a return to the mean, something like that. Either way, we've got nice risk reward here for getting long underneath value. So we'll see how it plays out. Alright, we definitely, this is where we are now. I mean, duh, right? Is this not a big gaping gaping area? Gap fill is like 40.14 or something. 40. I forgot. Let's see. Yeah. So the gap starts at 40.30s. Yeah, gap fill would be. This is about the gap. This is rough. This is not perfect, as you can see. Probably be a buyer at 40.10 too. That probably gets a lot of stops underneath the gap, but we'll see how bullish it is if we get there. But anyway, you can see it building here. The same thing that we're looking at with the TPO, you can see it here, right? Essentially that shape, and then right, a bit of a B shape going on. So let's see, a little bit of initiative buying up in this area. So 14 minutes until the Fed. I got to be cognizant of that so that let's get back to the other. We'll go to the default TPO. Give us a bit of the T+2 visual here. Yeah, so 50%. Did we hit it? Yeah, almost, right? A tick or two. That's what I was talking about earlier, right? Almost. So failure to expand to the downside. Right, 100% bears are starting to get control, but 50%, so even just short term expanding above a few ticks above this area. But I'm not going to position into the Fed minutes. I'm not going to piss away profits. No thanks. Let's see. Hey, my disc A is in profit. I bought some TSM today. I bought some Rocket. I bought some Zoom. I bought some BYND. All a bit underwater, but nothing even close to alarming. Down like 0.22% cumulatively on those positions. It's just that's a little sneeze. Not a big deal. Now we're starting to OTFU, but again, Fed coming up. There's a buyer there at 40.6725. Let's go look at the footprint. Right, so when we go look at that TPO area, the area we highlighted, that should be filling in. Where does it take us, right? It takes us right back to the top of that gap. So, who knows? That might be it, short term. We get everybody anticipating, oh, we're entering the gap, go short, and then it doesn't fill short term, and then we bounce. One scenario. Everybody likes to anticipate, oh, the gap's going to fill. Depends how we get there. If we get buyers above the gap en masse, shorts often get trapped right before the gap. Then you get a nice bounce off that area. So, another one of the setups I like to play. So let's take a look here. 5 minute, just looking at the 5-minute bars. And I'm looking at, well, you guys can't see it, can you? Oh, time and sales, just initiative. Here, we'll bring it in a little bit here. Where are we gonna put it? Over here? Yeah, let's not cover anything up. Oh, I don't know. Maybe we'll put it up here, a little bit easier to see. There you go. Shouldn't cover up too much of the market by order data. Right now, algo's just chopping around with some players positioning at levels. You can see it. So, a little bit of chop here. That's what I said on Twitter, you know. It's like, okay, you got the initial impulses off of T+2 right through it, and then the return to it. And I said it real time on Twitter. I throw bones once in a while. I throw signals out once in a great while when I don't think it's going to matter, because I think institutions are going to sell that area. I'm short in T+2. What? To the tick. See that? It's essentially just the close 2 days ago. That's it. And T+2 is on 86,000 volume, which was highs for that time. So, yeah, as we came back up through it, some aggressive selling. You see that? Look at the volume on this bar, on some travel too. So they hit the bid, 24,000. And what kind of travel bar? 60, almost 65 to 59. So quite a bit for, you know, a low VIX environment. So anyway, 4 more minutes and then I wave goodbye, because I'm going to trade my real account around the Fed. I will be patient though. A lot of times with the Fed, you get an initial move and then you get a counter trend move, and it's, you know, some people say trade the initial move and go with that. So the counter trend move to the initial move, look to enter that, and that's just their rule. But for me, it's more about what they say and how the market reacts to what they're saying. So I like to let it shake out, but I want to be there. I want to see how it's shaking out. And a lot of times the market makers remove liquidity around that time. So you get these moves that don't mean all that much. So I will be waiting to see if some sort of trend develops with structure. If there's no structure and it's just up and down and up and down, I won't throw any contracts into the mix at all. So that's a little bit of my take of how to play that. You know, it'll just be dependent on how the market is interpreting the data, or how I see the markets interpreting it. So Ransquawk does a good job oftentimes with Fed minutes. So if you haven't followed them, a lot of times they will throw some bones out there. They have an algo that very quickly compares the Fed minutes and then highlights what is different, so, and what is the same. So it'll be like green and red highlights, and they'll put that out usually within, like, sometimes under a minute. 30 seconds or whatever, right? So you can kind of read through that. Just be patient. Let the market set up. At least that's the way I see it. But for some of you degens out there, you're probably already positioned long or short. Maybe long. Not I. Two more minutes here, then I'll take off. So if any of you guys have questions, but don't know if I'm going to be able to get to a comprehensive answer. A lot of quiet folks out there, so I don't see the chat making any. The chat's not very active, so. Initiative. Let's see. Really is good information to know about synthetic icebergs, and to know that there's a slight more delay, and so sometimes around levels they'll actually be hitting the ask even though it's still an iceberg, just because they have that off server delay. So good to know. So you won't always get a humongous negative delta reading there for an iceberg. All right, shutting it down. Have a good one. Good luck.